All right, and we're live. Okay, smart traders, I am back. And on today's video here, we're going to do Euro USD smart money analysis using smart money, not your typical retail analysis. Quite different. And on this video, you will see that I don't use any indicators. Well, I lied. The only indicator I will be using, I'll share in just a moment. I will not be using any RSI indicators. I don't use any lines, trending lines, or anything like that, or any other indicator for that matter. The only indicator I do use, if you want to call it indicator, is smart money. Okay, is the candles. All right, my son is giving me some stuff. All right, so we'll dive into the chart in just a quick moment, and so you'll see what I mean. And now this video is only for entertainment purposes. I have certainly not given you any financial advice. Any trades that you may take, it's solely you're on your own, so don't sue me, bro. This is again for only entertainment purposes, so you can see how smart money or using smart money analysis can really help you. And I use a very specific strategies called the banker strategy. All right, so we'll dive into it. And let me just put it fully layout, and there we go. All right, so and we're going to check here Euro USD. Now, before I get started, let me know if you are in the comment section, if you are a beginner trader and then the Forex, or if you trade, whatever trader you are you new? Are you a beginner? Are you an intermediate? Or are you an advanced trader? Now, these strategies, or where I'm going to share, it works for any kind of trader you are, entry level, mid, intermediate, or advanced. So let me know in the comment section, and let's get into it. So I just had here, let me actually erase that for a moment. Actually, I'll put it right here so it'll be quicker. Now, you'll see some lines here. I'll go over them with you. Now, the banker box strategy, one of the things we do is basically we'll look at some accumulation. And on this chart here, we can go to the daily, and you can see there's accumulation here, and then there was a bullish, right? It just skyrocketed, right? As you can see here. Now, the overall trend, it's kind of an indecisive. If you look here, higher high, it was bullish, right? It was bullish on the daily. Right, higher high, then didn't break. And then, but here it failed on this chart here. It failed to create a higher high. So, but if we look here at the 4 hour, so you want to see, you always want to have a good idea where the market is going, have a bigger picture, right? Let me see here, for some reason. Okay, now it's better. Wasn't giving me the chart. So it's been on a if you look at the daily, that's a weekly. It gives you a better inclination here. It's been it was on a big bullish trend, and then it kind of there was a big retracement, and you see here there was an accumulation on a weekly. Okay, this will probably see an accumulation here as well. You see the accumulation here on a daily, and what happens is banks wait to get retail investors, traders, to create setups, traps. And then we use the banker box. We look basically to see, the banks basically tell us where the market is going. So if you notice here, and this is on a daily chart, if you notice here, there is a big, it created this trend, right? Up and down, right? Right here, right? And then there was a big retracement right here, right? Boy, on this retracement, it created another banker box. If you look, another accumulation here, a smaller accumulation, but there is an accumulation here, okay? Now, if you look here, using smart money strategies, what we would be looking for, it would have been some here, a banker candle, because we look for banker candles. All right. So if I expand this, look at this here. There was a daily banker's candle here. Okay, banker's candle. You can see here before it's the last push down before there's a big push up. And we see that here. We see this here too, but this is probably more an indecisional area right here. I would call it more indecisional. But the banks could have reacted here as well. Now, we go back. We're going to go back here to see. I marked this. This is, let me just mark it. This is a daily candle. All right, put a D over there. So let's go back. Let's go look here and see what happened. Now, if you think this is coincidence, look exactly where the banks reacted, right? There was this big flag, right? Big flag here, up and down. So smart money trading, if I were using smart money trading and using our strategy, we wouldn't be trading this here at all. What we would do, we would wait for this, for a reversal here. And if you look, which I marked this daily candle, look exactly what the banks reacted, right? Reacted. And now there's a reversal. So now bringing here to the 4 hours, right? This is the daily candle that I showed you, right? Back here. Actually, it was more down. Yeah, back here, right? And now look what they did, right? There was a reaction. There's an accumulation, right? There's an accumulation over here. And what happens is we use this strategy called in the banker strategy, and over the banks here, basically, retail would probably put their stop losses up here somewhere, and or if they were going to sell, if they were going to buy, they would put probably their stop losses somewhere around here, or perhaps even down here, right? Somewhere around this area. Let's just say here. But what the banks is create setups, traps, and they take the highs, they take all the investors, right? All the retails they are buying here, right? Whether they buy here or they buy there, they take them all. See, they take them all. And what happens is creates this, as we call it, a break of structure. That's why you saw earlier this right here, break structure. It just basically means that it takes the banks take the go create traps, and they go on the bullish trend, which takes all the investors here, all the buyers, all the sellers. Let me just mark this here. They take them off, right? All their stop losses, boom, and then they retract and go all the opposite way, right? And then they take all the buyers. And then what happens is they then go back, and we look for a banker candle here. They go back. Let's just say that this wasn't here, right? And then they go back and they come back to mitigate somewhere, possibly here, could possibly have been here as well, but they go to the extremes typically. And you can use also a fib retracement, which you can use, and you could learn more about that. But you'll see here, as if I just move it forward, look at exactly here, exactly what the banks did. This is not to a lie, right? Now imagine you got in right here. You got in right here in this 4-hour candle, right? You got here in this 4-hour candle, right here, the one I just marked. And you did your risk reward. Let's just do a short here. Imagine you got in this candle. And let's see what your risk reward would be if you got in here. Let's just say you did this, right? Your risk reward would have been what? And you covered the wick. Your risk reward would have been 1 to 9. Now you tell me if you've ever seen anything like this. Now I can go through the chart and show you plenty of examples. Now, if you want to learn exactly how to look for banker's candle, how to exactly get hand-delivered high probability trades like this, instead of you looking for these trades, where to find them, because it can take you hours to look for these trades, let me know. Drop me a comment. Heck yeah, and I'd be happy to invite you to our 7-day trial live trading room. Okay, so as you see here, the banks came right back, and look what's happening now. They came right back. They came down now in a bearish, right? But what happens is there's always another possibility for another entry, right? So let's just say you missed that entry, right? Now look, there is another accumulation up here, right? There's another accumulation. So now this isn't a 4-hour. So let's just say you come down to the 1 hour. And let me just get this 4-hour out of the way that we drew before. I actually already have it there. So, I wonder why I have it there, because I am waiting for the banks to have a retracement back to this area for me to take this trade back down, okay, to sell this. And actually, it sounds like I have a fib zone there, because we use also the fib zone, and it's on one of our favorite areas, which is around the 71.86 mark. And right here, the candle is, this is the 71.86 right there. Okay. So, and the candle is pretty much mostly right in the middle, right? So knowing that, this just gives you more confidence. This is going to be a really good trade. Now, this is on an hour chart. Now, if you want to be a little more precise, you could shop a little more candle shopping. This says this, the 30-minute and hour are the same. Let's go look at the 15 minutes. Oh yeah, I have a 15 minutes already here marked. So what I'm waiting now is for a retracement to this area. And then whether I just put a pending order on this one, right here on the 1 hour, or I have an alarm here. What I want to see how the banks are going to retrace. If it's a very very fast retracement back, I probably will wait. If it gets close, I probably will wait and do a double mitigation, which you can learn that when you join our Facebook trading room. Or if it comes, so let's just say they don't do that. Let's just say they came nice and steady, right? Nice flag up, something like this, right? And if it's nice, something like this, I see it, and I'm gonna put a pending order right here, okay? Because this exactly what I showed you right here, what I traced down, it gives me really high confidence, high probability that this is gonna come down. And then it's a better where do you want to take your profits? You can do, like for example here, it could be a 1, 2, 3, right? If you risk 1%, you could get 3% here. If you bring it here to a 4-hour, I mean, I'm possibly expecting to come all the way down here. But if we don't want to be greedy, let's just say 1 to 5, right? I'm happy with 1 to 5. Get out, collect my money, and I'm out. And so if you risk 2%, there would be if you risk 2% on this trade, it would be like a 10% profits on this trade. Now, how cool is that, right? Pretty simple. Once you know how to identify these areas and what to look for, because there's another breaker structure here as I have it marked. So it's all probabilities. This is what we do is about building probabilities. Kind of an attorney, an investigator, right? It puts that's the investigation. It puts all stacks the elements, and then the element it just increases your probability of being right. And this is exactly what I did here. So that's what I wanted to share with you. Now, let me know if you find this helpful, and if this is a new concept they've learned that you kind of like come across now, or not. Either way, but if you want to learn exactly how I do it and what we look for, myself, or my buddies would run a weekly trading room that we go over it, and you can possibly even see some live trades as well. So hope you enjoyed it. Let me know what you like most. And again, if you want to hop on our trading group, let me know. Drop a comment. Heck yeah. And I'll be happy to invite you. Hope you have an amazing day and continue getting some pips. Go crush it. Bye-bye.